There is now a new way to trade precious metals. CME Group launched 3 new products today, making them the first ever exchange-traded precious metal spread and ratio futures contracts on the market. Joining us now is one of the pioneers behind the products, Miguel Vias, CME Group's head of precious metals. Miguel, good to have you in studio. Good to talk about these products.
Daniela, thank you for having me.
How'd I do with that description? Trying to get it
that was amazing.
All in. Okay,
yeah,
so
you sound almost as excited as I am. So.
I am excited to talk about this with you today. Tell us a little bit about these products.
So today we launched the gold-silver ratio, the gold-platinum spread, and the platinum-palladium spread. And these are cash-settled or financially settled contracts based on our underlying liquidity. So the gold-silver ratio, for instance, settles on the GC contract and on the SI contract. It's literally just one price divided by the other, and it's its own standalone futures contract.
So why now? What made you decide this is the right time for these products in the marketplace?
Well, the timing has a lot to do with actually the gold-platinum spread, which over the last 5 years has had an incredible amount of volatility. Okay. At one point, platinum was $300 over gold.
Right.
Now it's $250 below gold. Okay. So that motion, that's not easy to capture for most traders, was the impetus for looking at these contracts. That and the fact that the gold-silver ratio is incredibly popular globally amongst professional investors and traders, but it's not easily accessible to retail traders. So for instance, when I traded the gold-silver ratio at the banks, you had to have a position in gold, you had to have a position in silver, you had to manage both, you had to roll both, you couldn't leave a stop. All of these like operational difficulties that didn't allow people to trade it, this takes all of that away.
And the gold-silver ratio is at highs that we hadn't seen in years. So does that play well into it also?
I mean, I think that helps the popularity, right? So when we started to think about these and we went out to the market and started talking to folks about, what do you think about this? Would this be something that you could use? Would it be of interest? I think the fact that it was so high lends itself to its popularity. So I think without a doubt, the price action is a...
So the products are launching today?
Launched today.
Wow, so I'm happy you're speaking to me about this first. Yeah. So what has the reception been thus far? Now, not from the public, but from your peers in the industry. What are they saying about it?
Yeah, so I just spent 2 weeks, we were talking about this earlier, I spent 2 weeks in Asia. Part of that was education and a bit of a roadshow for the new products. And it's incredibly heartwarming when you're in a meeting and you're speaking about new products that you're launching, and you say, we're launching this. And they're like, yeah, that makes a lot of sense. In fact, you get, why hasn't someone done this before, right? And that's the best.
Right.
And truthfully, no one's done it before because no one else can do it.
Okay.
At the end of the day, we are the only folks who have enough liquidity in gold and silver benchmarks to create, and in platinum and palladium, to do this.
So why would a precious metal investor, choose these products over traditional vehicles?
Well, these are they're non-traditional. I'm sorry, and I'm stumbling a little bit because it's almost like these are brand new, right? This is a whole new cadre.
It didn't exist
before.
It didn't exist before. The option wasn't there.
The option wasn't there, right? So if you wanted exposure to this, you just couldn't get it. If you wanted to put on the gold-platinum spread in a simplified way and manage your risk correctly, it was basically impossible.
Wow. So now that this option exists, if someone says, why should I choose this path? What would your argument be?
I think simplicity.
Okay.
Right? Again, I think if, for instance, the gold-silver ratio has been around as long as there's been money.
Right.
People have been looking at how many ounces of gold, how many ounces of silver buys an ounce of gold as long as we've had currency. So it's been very popular for a long, long time. But it's not something that you could hedge. It's not something that you could speculate on ever, especially if you were a normal person. So.
Well, I wish you best of luck with the products. And before I let you go, Miguel, I know you can't give a specific price forecast, but what are you making of the gold and silver market these days?
I think we're in interesting times as always. We discussed this earlier. We came into the year, and you'd mentioned that people were very, very bearish, and all of a sudden it seemed like in January expectations for the Fed changed, and gold rallied 30%. It now seems that the rhetoric out of the Fed is a little bit more serious about actually hiking rates next year, and you're starting to see that factor into the price. So I think all eyes on the Fed really at the moment.
Yeah, so we'll see what 2017 has in store. Miguel Vias, thank you so much for joining us in studio today.
Thank you, Daniel.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow. We'll be in New Orleans at the investment conference, so we'll have lots of great interviews from the conference. Thanks for watching.